Welcome to Fisher Webinars. The following is a recording of Is the World About to Run Out of OCC? Originally recorded on Thursday, March 10, 2016.
Welcome to everyone, and thanks for taking some time to join us to talk about this very interesting topic about whether or not the world is about to run out of OCC. Something that I've been thinking about for a while. I've had lots of discussions with people about it, so I thought it was a topic worth digging into a little bit more. And you know, a lot of people think that we are about to run out of OCC because of some commonly held beliefs, things like that a fiber can only be recycled 7 times before it becomes too small and is unusable, and that recovery rates, collection rates of OCC are approaching their practical limits. We are just about to get to the point where we can't collect any more old cartons. But this is not new. We've been hearing this for many, many years now. This is a snippet from an article that appeared in 2006 that talked about this global shortage of OCC, and the article went on to talk about perhaps some prescriptions for what they saw as a real problem. So this is not a new issue. But if OCC is really in such short supply, why isn't the price going straight up? Why isn't OCC $300 or $400 or $500 a ton? I often like to look at what the markets are telling us about these things, and I think what we can see from this chart, this is just U.S. Census data that shows the average value of the exports of OCC. So you see that actually in recent times the price of OCC has actually been going down. So the market's telling us that they don't believe that OCC is in short supply. But why has the price been going down? Well, prices for OCC have been depressed recently because there was a huge inventory buildup in China in recent years, and that has served to keep prices down. So let me show you a little bit more about that. So this is a chart that shows the Chinese exports of goods that are likely to use corrugated packaging. This y-axis is the dollar value of those shipments, and that's this purple line. This y-axis is the year-over-year change, and that's the orange bars. And so you can see that as the world was coming out of recession around 2010, there was this huge snapback of exports from China. Now, at the same time, we've tracked exports of OCC from the U.S. to China. This axis again is the absolute volume, and this y-axis is the change in percent. So what you'll notice is that while we had this big snapback here in 2010 of exports from China, which would imply, hey, the economy's heating up, things are going really well, the next year you saw this huge increase in the amount of OCC that China was buying from the U.S. So I think what we can infer from here is that Chinese buyers of OCC looked at what was happening in their home country economy and say, hey, things are starting to heat up, and so we better buy all of the OCC that we can get our hands on. Now, there was something else that happened at this same time. There were some published price forecasts for OCC. Not ours, I'll make sure I note, but there were some published forecasts that showed the price of OCC just skyrocketing. It was like a hockey stick. It came here and then took off. So again, if you're a Chinese buyer of OCC and you're seeing these data points, you're seeing factory orders tick up and exports tick up, and you are being told that the price of OCC is going to go straight up, you're probably going to buy all of it that you can. And in fact, we think that's exactly what happened. So this chart shows exports of OCC, and then this is sort of the implied inventory, the calculated inventory of OCC. And you'll see that around that period of time, inventories really started to build. And then recently, the Chinese producers have started to work off those excess inventories. Now, as those inventories come down, and they have been, and they are to a level now to where we would expect to see prices for OCC start to go back up because this huge inventory glut has been diminished. Now, I'll comment here that there really is no specific statistic for OCC inventories in China. So we calculate this. We gather several different data sources from information that is available to us and to our modeling partner, our forecasting partner, STE. And we use math to calculate what these inventory levels must be. And you can imagine if you know what inventory or what imports into China of OCC are, and you can look at what production of containerboard is, that gap between there certainly implies that there must be an inventory build. The other thing that you can do is there is some publicly available financial information. For instance, Nine Dragons publishes a financial report, and if you look at their balance sheet during this period of time, you'll see a huge increase in what they call raw material inventory, and they actually note that that's things like recovered paper, or OCC, and coal and whatnot. So when you look at some of those balance sheet items, it coincides with what we see as this huge inventory run-up. So we've said that that inventory has been depleted for the most part. So what does that mean? Does that mean that we're now about to see that hockey stick chart? Are we about to see OCC prices skyrocket? Well, let's kind of step through this thinking a little bit. So if we've had those high inventories and has been what has been depressing OCC prices, and those inventory levels are coming down, and we're close to collecting as much OCC as we can, that practical collection rate is, or we're nearing that practical limit on collection rates, and we're using a lot of OCC or losing a lot of OCC as we recycle it, such that we can only reuse a fiber 7 times and then we can't use it anymore. If those things are true, then doesn't that mean, shouldn't we expect that there's this shortage coming and that we should expect prices to go up dramatically and just keep on going up? Well, no. We do expect OCC prices to go up in the near term because that inventory in China has been drawn down, and we think that's to the point now where we will, in the very near term, start to see some price increases as a result of Chinese buyers coming back into the market and buying more OCC. But we then expect, after that inventory issue kind of has worked itself out, we then expect OCC prices to go back to what we have seen in the past, which is a pattern of volatility, if there is such a thing as a pattern of volatility. But what I mean by that is the OCC price will move up and down between a floor and a ceiling. But that movement will be at a level that's an average level that's higher than what it is today. So we expect some near-term price increases and maybe some price spikes in the near term as Chinese buyers come back into the market. But then we expect that to settle back into this level of where prices will fluctuate, but that new sort of band, if you will be at a higher level than where we are today. So let's look at and maybe even challenge a couple of these commonly held beliefs that cause us to think that that's what's going to happen with OCC prices. So we'll challenge these assumptions to kind of explain why we think that that's what's going to happen to prices. Okay, so the first question is, are we really reaching the practical limit of how much OCC we can collect, particularly in developed countries? Well, I took this chart from AF&PA's website, and what it shows is the recovery rate of OCC in the United States. So in 2014, AF&PA calculated that was about 90%, so pretty high. But we need to understand the math in this chart. So this rate here is calculated this way. It's the amount of containers that are collected in the United States divided by the container board that's produced in the United States. But what about all the cartons that are coming into the United States that were made somewhere else as a result of trade flow? This number doesn't consider those at all. So if we look at Europe, this is from CEPI, we see something similar. The story is similar. We see high recovery rates reported, but this data can be a little confusing, so let me try to help us focus our attention here. So in these boxes, let's focus here. Case materials, that's container board. This row is production of that product. This column, if you will, this is recycled fiber that came from corrugated or kraft. So it started out as corrugated or kraft. This is OCC. So the figures here are recycled fiber, the amount of recycled fiber. This is total production. Now, CEPI reports what they call a utilization rate here, and you see for case materials it's over 93%. But that's not the recovery rate. That's just the amount of recycled fiber that is utilized in the production of case materials. So it's not the collection rate. Well, let's keep digging and see if we can figure this out. So we'll look at a couple of other figures here. So again, this is OCC usage. So we say here that there were 22 million, this is metric tons in this chart, 22 million metric tons of OCC used, and there were 26 million tons of case material. So if we amount of OCC used divided by the amount of OCC produced, then we get this 85% collection rate. So maybe that's the rate. Well, no, that's not really the collection rate either, because we have to add to this amount of OCC that was used the amount of OCC that was collected and exported. So a lot of this went to China, for instance. And we add those numbers together and we see that in Europe, or at least these CEPI countries, there was almost 26 million tons of OCC collected. And we've got to add a little bit to this production number because there were some imports of linerboard and medium that came into Europe. So we have this total of 26.6 million tons that were available. So if we do the math this way, and this is kind of how AF&PA does it, it's the amount of fiber that's collected divided by the amount of boxes that were produced. We get this really high 97% implied collection rate. But again, what about all the cartons that came into Europe as a result of trade flow? This calculation doesn't consider those at all. And that's a big missing piece. So let's think about that. This chart's from the World Trade Organization, and I've just picked China. That shows the export of consumer goods from China to Europe and from China to the United States. You see it's a huge number, $243 billion of consumer goods, 220 to the U.S. So there's this huge amount of products that are leaving China in a corrugated carton, and they're headed towards Europe, United States, other parts of the world. And so what that means is those boxes are now available for collection at their destination. So we've got to consider those when we're thinking about collection rates. And so I've done that here. What I've done here is I've taken the data that we just looked at. So for instance, this is CEPI. This is production of containerboard less exports of containerboard. And then I did some calculations, and I developed a factor for trade, and it's how that equates to boxes, for instance. So what we see is through trade flow, there's almost an additional 10 million tons of boxes that are coming to Europe as a result of trade. Well, we are collecting in Europe about 28 million. We're back to short tons here, by the way. We're collecting about 28 million tons of the 39, so that means the collection rate is actually like 73%. Same thing for the United States. This is production of container board, less exports of container board, trade flow, and then the amount of collected OCC. We see the math there now is 78%. Now, these numbers may vary a little bit because we may argue about do we have the right factor here. I think it's pretty good because it balances out around the world. But the point is that collection rates are in the 70s in these countries, not in the 90s, or certainly not 97 like the data for CEPI might imply. Well, so if we are not at that level yet, how much can we collect? Well, we think that today the global collection rate for OCC is about 82%. Again, there's really no reliable specific number that's published along this line, so you got to kind of pull lots of pieces together and balance a system to calculate this, but we've built a pretty sophisticated model to help us do that. And so I'm pretty comfortable that that number is around 82%. Now we could look to Japan, for instance, to say, well, how high could it be? But Japan's probably too high of a bar for the rest of the world to clear, because Japan's collecting 97% of the OCC that's available. And they're doing the calculation, I'll say, the correct way. This is from Japan Paper and Recycling Promotion Center. And you'll see here they make this note that they are accounting for the corrugated container that comes into the country as imported products, so wrapped around products that are being shipped into Japan. But even with that calculation, they're collecting 97%, which is a huge amount. Now, Japan's unique for a number of reasons, but a couple are just fairly obvious. And that one is just small land mass coupled with dense population centers. So the OCC is really close together. It's not spread out over a wide geographic area. So that lends itself to ease of collection, and so we would expect collection rates to be higher there as well. So we think, we realize that it can't be 97% for the world. We think the practical maximum collection rates somewhere between 85 and 90%. So it's going to be a few more years before we get there, but it's very likely, and maybe some would say certain, that we'll reach a point where we're collecting all the OCC that we can. And that's not 50 years from now, but it's not next year. It's in the foreseeable future we'll hit that point, but it's not a pending deadline. It's not something that's going to happen right away. And we'll talk some more about that later. So back to the second part of the second of these assumptions, that you can only use a recycled fiber 7 times, or a fiber can only be recycled 7 times. Well, what does that mean? What do we mean when we say you can only use a fiber 7 times? Well, let's imagine that we have this one big corrugated carton. It weighs 100 tons and it's 80% recycled, 20% virgin, but it's also got some moisture content that's, when it comes off the paper machine, of about 7%. So in this box, if you will, there's 7 tons of water, 18.6 tons of virgin fiber, and 74.4 tons of recycled fiber. Now, what that means is that 18.6 tons of virgin fiber, each one of those fibers has 7 turns left. That's what the 7s are here in the box. 10.6 tons of the recycled fiber has 6 turns left. 10.6 tons have 5 turns left, and so on, until we get to those to that 10.6 tons of recycled fiber that's on its last leg. It has already been through the 7 turns. It has no turns left. Well, what happens to that fiber? Where does it go? What does that 7-turn theory really imply? Well, if we're losing 10.6 tons of fiber each time, that means it has to exit the process. Presumably it goes into the sewer. So if we're losing 10.6 of the 93, remember this 7 tons was water, or 93 tons of fiber, if we're losing 10.6 of the 93 tons that were in that box, that means our fiber loss is 11.4%. Just said differently, that means our pulping yield is 88.6%. But wait a second. The cartons that are coming back into the mill gate for recycling, they now have more than just fiber in them, right? So for instance, there was glue and tape and ink that were added during the converting process when the linerboard and medium were taken and formed into this corrugated carton. We added some stuff to it and we added some weight to it. Along the way, there's rocks and plastic and glass and all kinds of trash that end up in these loads of OCC that come back through the gate. The other thing that happens is sometimes these boxes sit out in the rain at the point of collection, and so there's environmental moisture that gets added to that. But the point is that there's a significant amount of weight, so let's call it 5 to 10%, that gets added to the weight of the carton when it goes on the scale at the mill. So let's just assume that's on the low end. Let's assume that what we weigh is 105 tons. We're going to add 5% to the weight of the carton. If we have 88.6 tons, right, that's how much fiber we have left under the 7 turns theory. That means if we divide that by 105, our yield then is 84%. So we know that carton weighs 100 tons when it left the mill, but it weighs more when it comes back in, and that's important because most mills that we talk to tell us that they calculate yield in the OCC plant like this. It's the fiber to the storage chest, so actual fiber out, divided by all of the material that went into the pulper. Now, all of that material had all of that other stuff, right? The environmental moisture, the glue, the starch, the ink, the rocks, the trash, the car batteries, whatever else was in that load is going on the scale, and that now becomes part of the denominator for this equation. And so as we're talking to folks at mills, when we'd say, so what's your OCC yield? We hear pretty consistently numbers between 80 and 90%. And the most common number we heard was 85%. Now I find that pretty interesting because this 7-turn theory, if you think we lose 1/7 of the fiber each time, that means you keep 6/7. Well, 6 divided by 7 is 85.7. Now this could be a total coincidence. Or it could be one of these self-reinforcing ideas that people say their yield is 85% because this math works out. Or maybe we say we can recycle the fiber 7 times because people report yields of 85%. But let's go back to the fiber yield that we calculated earlier, and let's think about that. So if we're losing 10.6 tons of the 93 tons of fiber, that means our fiber yield's 88.6. Well, can that be right? Well, let's just kind of draw a picture of an OCC supply chain, and we'll use numbers implied by the 7 turns theory, and let's think about that. Now, taking out the concept of moisture here, so let's just think about fiber just to make this easy. So we've got 100 tons of container board, it's 20% virgin, it's 80% recycled, and we see from FisherSolve that the amount of OCC is 70 of those 80 tons, if you will. So the majority of the recycled fiber is OCC. But it's really important to remember that today's OCC was yesterday's container board. Now that may sound silly, but we need to think about this for a minute, because one of the things that I have actually heard and discussed with people is this idea that, well, if you can reuse a fiber 7 times, what that means is that for every ton of virgin fiber that you put into a container board, you're creating 7 tons of future recycled fibers. Well, that doesn't work, because before it can become an old corrugated carton, it had to become a new corrugated carton. So you can't collect it until you make it. So I understand the attractiveness of that argument, but I don't think that we can use that argument, because again, it all has to start as a ton of container board. Okay, so we start out with 100 tons. We think we're collecting about 82% of it, so we've got 82 tons that come to the mill. We have this pulping yield of 88.6. We're losing 11.4%. That's 10.6 of the 93, to recall the math. So what this 7 turns theory implies then is that we've got 73 tons coming out of the pulper. But wait, we do have some other, what I'll put in quotes here, you can't see me, but I'm making air quotes, OCC. This is pulpable fiber that's in the load, but it's not really OCC. It's not a corrugated container. It's something else. It's mixed papers. It's other things that get in the load. And interviews tell us that that's about 5% or so. People say, well, if it's more than 5%, we're going to reject it. But it's about 5% of the load. But it gets called OCC, and it gets paid for as OCC in the mill, and it gets reported that way. But it's really not, okay? So that's about 5%, or 4 tons that gets added to the pool. But there's a lot of OCC that goes out of this pool to make other products. Things like uncoated recycled board and coated recycled board use a lot of OCC. In fact, they are number 2 and 3 in usage behind container board for OCC. That's about 17.5, 18% of all of the OCC that's collected is used to make these products. So it's a significant amount that goes out. So that leaves us with 63 tons available to make container board. But wait, that doesn't work, because we need 70 tons. We only have 63. So the math just doesn't work under this 7 tons theory. For it to work, the world would have to be collecting just north of 91% of all OCC. That's not happening, and that's probably not possible. So this doesn't work. The 7 turns theory in this model doesn't work. So if that's not right, how many times can you reuse a fiber? Well, we ask a lot of those questions. So we did all these interviews with people, and we asked about what their actual fiber losses were in the mills. And we consistently heard from people that said, well, you know, the majority of the loss is all this other stuff, right? The glass, the plates, plastics, and the, as I said, car batteries, whatever else gets in the load. That's the majority of the loss. And when we pressed, we said, but how much fiber are you actually using? Most of the people we talked to in North America and Europe, low single digits. 1, 2, 3, 4% is what they told us. So we actually have a model, a pretty robust model to kind of calculate this, but you really don't need a complicated model. You can use simple math to do this. So let's plug in some numbers using that 7 turns theory. So we'll go back now to where we've got the cartons of containers, or the bundles of containers that are coming through the mill gate. It's got some other stuff added to it, right? It started out at 100 tons. We added some stuff along the way, so it comes in at 105 tons. If that 85% OCC yield is the typical, that again is the fiber out divided by the total weight on the scales, that means we get 89 tons of fiber to the storage chest. Well, we had 93 tons of fiber to begin with, so 89 divided by 93 is a 96% fiber yield, which of course means we have a 4% fiber loss, a number that we heard, a lot from people that said that was their actual loss. But if you're only losing 4% of the fiber, it's not 7 turns, it's 20. And again, this is calculated by the amount of fiber divided by the recycled fiber that's available. So it's 20 turns, it's not 7. But if the fiber yield really was 96%, is that enough to meet the demands of that supply chain? Well, let's go back and look at it. And so we've adjusted the math here to say that instead of 88.6, the pulping yield is 96. So now we've got more tons coming out. You'll notice this number changed a little bit. It changed from 14 to 15. That's because it's a percentage of OCC that's available, so it went up a little bit. But the point is that we still don't have enough. We only have 68 tons of OCC that it's available for containerboard production, but we need 70. So it doesn't work even at 96. Now, fortunately, we can just use some basic algebra to figure out what the required yield is, and we've done that here. So to balance the system, we need a pulping yield of 98.5%. Well, if we're only losing 1.5% of the fiber each time we recycle it, look at this. Turns aren't 7. It's more than 50. Now, some of you may be scratching your head and saying, wait a minute. But that's what the math tells us, right? So what this shows us is that, are we about to run out of OCC? No, we're not on the brink of running out of OCC. Collection rates are actually considerably lower in developed countries than the numbers that get reported. Europe and North America have a lot of headroom. They can collect a lot more than what's being collected today. The other thing is we're not losing nearly as much OCC fiber as we recycle it as is what is commonly believed. This 7 turns theory just doesn't seem to be too accurate. Now, as the balance of containerboard production shifts more towards recycled, then the demand on collection rates is going to go up, and that is happening. It has been happening. There's a large, that 70%, or I'm sorry, 80% recycled content used to be a lot less than that, and it's increasing. So that will continue to put pressure on collection rates. From a pricing perspective, as we work down these OCC or these inventories in China, the price of OCC is going to go up. But after that anomaly kind of gets resolved, we'll see that prices return to this, I keep saying pattern of volatility, but I don't know, that may be an oxymoron, but back to this pattern where prices bounce around a lot for the next several years. And we do have an OCC forecasting model which predicts very detailed levels, movements in price of OCC, so that's available. And as we approach that practical maximum collection rate, then OCC prices will start to steadily and persistently increase, because at that point, this commodity will in fact be scarce and becoming more scarce as we go along. So that's when you'll start to see consistent and significant increases in price. And it's really important that we understand this, because OCC prices have such a significant impact on the industry. If you're a producer that uses OCC, the price of OCC and the availability of OCC has a big impact on your profitability. But it also has a big impact on the return on capital investment. So if you are an investor looking at spending money based upon the availability or lack thereof of OCC, you need to have a pretty good understanding of what's the truth, what really is the case. Because if you're planning on low OCC prices forever, well, that's not going to happen. But if you're planning on the world's going to run out of OCC tomorrow and prices are going to go through the roof, that's not going to happen either.